count with me. I don't need to say go. Just I count with me and count down with me. 5, 4, count down. 3,
2, 1. What is up, everybody? Welcome to the Russell Journal. I'm Russell, and this is my journal entry for December 4th, 2022. I'm already ready for it to be 2023, I guess. What? Must be January. We are coming into the end of the year. There's a lot of stuff that happens around here, a lot of seasonality things, and really you've put the whole market in a place of some pretty extreme turbulence. Not so much in the price action, mind you. Volatility is definitely down, but you are for sure in a place where the price action doesn't really match the fundamentals. So you're in this really difficult spot in the market where a lot of weird things can happen, and they're manipulative things, and they're things that are really kind of nasty as far as far as all of this goes. You have to pardon me. I gotta do something really quick, especially while we wait for people to get in here. I can't hang with that light right there. So where you are with it is that you're up here, and we'll go as we go into the charts and we plan for today. There's things that we need to be aware of that are, again, they don't really match the current economic picture, or at least the beliefs about the current economic picture. We'll go in and we'll see the Dow Jones has got itself really into bull market territory, in a place where economically that we're not ready for that yet. It's way too early. Some of it can be from the concept of short squeezing to the others really do believe, there is a group that really does believe that the Fed is going to pivot. And I'm not really in that group. Not that it couldn't happen, but as a trader, when Powell is telling you he's not going to pivot and that the Fed is not going to pivot, for you to go against that is gambling. It's not trading. And one of the things you will find, especially on this channel with me, is I'm really averse to gambling, even though I do sometimes, a lot actually. I tend to get sucked into gambling quite a bit as far as the trade goes. So I want to be averse to that. However, this is the time of year that there's a lot of things that we need to be thinking about. We need to be starting to think of our trade ideas for next year. We need to start building models for how the economic picture will develop next year and things of that nature. So there's a lot of stuff that we can look at as far as what we're going to do for next year, next summer. You really want to start thinking that far ahead as to like what the next, as traders, we tend to try and think about what the next day is going to do or the next week is going to do. And even maybe as far as what the next month is going to do. But we really need to kind of grasp ourselves some sort of economic picture as to what the next year is going to do, especially as traders, so we kind of have an idea as to what's coming out. Now, trade ideas are a very interesting concept. They're a very interesting thing because they can really allow you to be ahead of the market in a lot of really great ways. So, for example, something like, our trade idea might be, if we look at the weather and the projections for next year, maybe the weather's going to be really, really good. And so you want to start thinking about things that people are going to spend money on relative to the weather. Okay. Well, what's something in there that really matters? And then you can compare it to how the market is perceiving things. So, for example, a trade idea may be, if the weather is going to be good, people may be traveling and going and doing things in the summer, like visiting, say, theme parks. Well, this might be a place where you start looking at something like Disney, and buying Disney ahead, thinking, well, their revenues are going to be down for the winter, tourist season, but in the summer they could come up. So you might find a place in here for something like Disney where, you might find a very affordable something like Disney, and then you may not like Disney, and you may realize that Disney is under a lot of scrutiny and a lot of pressure, especially given that the really woke nature, and not that I'm commenting on anything that's woke or not, or whether it is, but there is a stigma around Disney about the woke nature, and you may see people pivot from going to something like Disney and start to focus on something like Six Flags. So you might be looking at stocks that are sort of like, that are out of the mainstream, that are fairly beaten down, but that have a potential to do something like Six Flags next year. So where you are with it is really time to start thinking about your trade ideas for next year. Again, my trade ideas are very much so still that, aligned with SPY and such, and things of that nature. But what we really want to start thinking about this now, and one of the reasons I want to think about this, especially if we're trading the S&P or we're trading the Dow Jones and things like that, really, because what we need to know is where we are going to get the best opportunity to buy those stocks at a very low cost basis. So as far as that goes, as far as like the trade into the future goes, we're really thinking. Now, I'm not going to spend a whole lot of time on this today. We will do more as we get closer to the end of the year, and as we get more into the middle of the winter season, you will see a lot of stuff. But we want to be aware of this. We want to start putting those watch lists together, things that are going to be very interesting, very good for next year, because there's going to be some great buying opportunities come along the way. Now, what we do want to do for this week is we really need to look at what's going on with the indexes, what's happening, why is it happening, and what are sort of the ideas happening around that. Again, we have this sort of idea that you are going to get a very rapid Fed pivot. There is a belief in the financial system that the Fed has gone too far, and that they're going to have to turn face and start lowering interest rates very rapidly. I know that if you follow guys like Steve Van Meter, he is very avid, very much so, about the idea that you're going to see this, that you're going to see the Fed make an abrupt about face, start to drop interest rates incredibly low. The thing that you have with this is that aren't really fair at this point is that you're way too far ahead of the Fed as far as that goes, and you're too far ahead of it. And it could be, you might be a couple months ahead of the Fed, or you might be just a week or so ahead of the Fed. And that is because we don't have the second CPI print with a lowering inflation number. Okay. So at the point that we get CPI data, which I believe comes out either this week or next week, we'll actually go into the market calendar here in a little bit, and we will look and see when that is happening. I think if it's not this week, it's next week. And then we get FOMC. But I think it's very important to try and not be super far ahead of the Fed as far as the pivot goes. The other thing that you have to realize right now, the other idea that is really going around about the market, is that there are money managers who get annual bonuses about this time of year, and they are manipulating the market. They are buying the market up. Because if it crosses, like if the S&P gets over 4,100, I believe, there's a large number of those money managers that get bonuses, and so they have a very very concerted. They have a very good interest or vested interest in manipulating the market up. At the same time, there's some things that are behind it that make it a good time to try and do that. For example, you have a corporate buyback that is happening across the board, mostly because they would rather buy their own stock than because they would rather do that than pay 1% interest. They would rather suffer the equity loss for a short period of time to not pay the 1% taxes. I'm sorry, the 1% taxes that the government is going to charge on stock buybacks. Okay, that's fair enough. Very fair enough. So you have a point of real stability where you have some support behind you if you are a money manager wanting to try and drive this higher to get your bonus. Other things that are very interesting is a lot of our bonds are starting to reach the point where the interest paid is about the same, if not higher, than inflation. So I know some of the investors I talk to have bought they've bought bonds that there are bonds out there that are paying 6.5% interest, and they're buying them in the event that the Fed does push the interest or the inflation numbers down to 2%. It's going to give you a real yield of about 4%, which is fairly guaranteed. Not to mention, at the point that it does reach the 2% inflation, the Fed will begin to lower those interest rates, and the equity value in those bonds will also skyrocket. So you have a real double whammy here where you can make some real money, making sure to buy bonds with the highest interest rate possible. So there's a lot of that. And we're going to go through this. We're going to go through the charts. We're going to look at them and sort of look at that stuff and kind of get a plan as to really where, when, what's happening, why it's happening, how it's happening. And some of it, there are some things that are sort of an illusion in the market, that the market is okay, because we'll look at the bond market and you'll see that the bond market's had a wonderful rise in it. Well, a lot of that is simply bond yields are good, and they're outperforming bond yields. The interest in bonds is paying more interest than a lot of other places. So guys are running in to buy bonds. I don't know when the last time you could buy a bond with a percentage of above 4%, but they are high. And so especially treasuries, U.S. treasuries and things of that nature. So we're really going into this, looking at it, and there's really a lot to take in. So we're going to go ahead. We're going to go over. I think the first stop for us is going to be the futures, and I'm going to transition over to that. We will go take a look at the futures, and we'll see what's going on. Give me one quick second. And I'm going to step a little out of the way. One of the things I wonder is if I'm not a little too much in the way as far as this stuff goes. Okay, so we go into the futures. You can see here that your futures are down a little bit. The S&P is mostly flat. -7 on the S&P is not very high, or not very far down, and the NASDAQ being down 20 points, not really a lot. And even 57, that's reasonable. It does suggest, the Dow does suggest that there might be some more pullback coming, especially as we get into the pre-market, as far as that number being where it is, and not being actually green today. So that is something that we're kind of looking at right there. Now, what is going to sort of lead this? Well, if we go over here to our economic calendar, tomorrow's the 5th. You do have PMI data coming out and some service index with factory orders. That's mostly a nothing burger. This PMI final, it's also an update of the PMI. So don't expect that number to jump around a whole lot. So none of these are really big market moving. The PMI could have some, if it's good or bad, it could have some effect. So we'll keep an idea, or kind of keep a look on that. if we do become in above this expected of 42.6 here, or 46.2, I'm sorry, dyslexia, right? We could see a positive movement in the S&P or in the other indexes. So as far as what we have coming up now, some of the stuff we want to look at, we do have consumer credit. We're going to get the revisions on that, it looks like. And again, initial jobless claims common claims. So it does not look like we get CPI data this week. Okay, so again, this is where like you really, especially guys like you know, like Steve Van Meter, I really do feel like I have tried to follow Steve Van Meter's advice, and it has only ever cost me money, right? His education around the economic picture is huge. It's good. He's done very, very well for himself. But for me, trying to do what he does, the way he does it, has never worked. So it's not that he's bad. It's just he doesn't really match my style, if you will, as far as that stuff goes. So really, again, I think you're too far ahead of the Fed if you're buying this, thinking for a pivot. I think that there has to be a massive correction to the pullback. Okay, so we've done our futures. Our futures are down and continuing to fall, it looks like. We're going to close this, and then we are going to come over here. So we have a lot of charts over here to look at today, because there's a lot of things that are really affecting this market. Okay. The first one is, again, the market we are looking at is the SPY, the spider. We're in on the weekly time frame starting out. It is a new week. We really kind of want to see what happened. And you can see there's a couple of things that have been very interesting. Okay. One, you do have this upwards movement. This is a bullish trend. Okay. But if you had it in the big picture, you're in a bull trend in a downtrend. You have this bull picture up here. If you ever get a chance to check out Corey on the Stocks channel, he has a very good analysis of this on the weekly time frame. You're in this massive downtrend. There have been these really great run-ups throughout here, and this is another one of them. It's an incredible rally. It really is. And you can see you're getting into this 100-week moving average right here. You're hitting some resistance, and you can see that if you're looking at your candles, right? This candle right here is a fairly bullish candle. It's about middle of the road as far as bullish. It's not as bullish as this last one, but you have this wick coming off the bottom. They bought it off of the 18-week moving average. You got almost all the way to the 100-week moving average, which is this bold line right here. And then you started finding your selling pressure. Okay. So what will happen? Well, you've got technically an outside candle here on the weekly, and that would typically suggest that this is going to continue higher. Okay. That would typically suggest that. There's a few things about it that are really going to be troublesome, though. Is one, on your slow stochastic on a weekly, your momentum is definitely overbought, right? So you're really baked up there. So the idea of having a pullback week or a slowdown week in this bull rally isn't something that's out of the norm. And with kind of the, no real key in it, nothing is major market moving data. You could have a small up week this week or a small down week. Be wary, though, if we do put in sort of what they call an inside candle, you'll start to see the reversal there. So this week, especially if you're looking at a weekly chart, really tends to matter a lot. There are some things, we can go to the daily chart and we look again. There's some things on the daily that are very interesting. Again, you have the bull trend. You have this pattern of higher lows, right? I'm going to grab this. And you have this pattern of higher lows. You're moving in that direction. You can see from the arrow, I will make it big and fat so that you can see it. See from the arrow, you are moving in this upward direction, especially off of this low all the way back here. So this trend typically tells you that if the trend is higher highs and higher lows, you want to be long biased. So you're thinking about buying calls. The second thing is this dotted line here is our 18-day moving average. You are above that 18-day moving average. So again, your filter is still to the long side. Next, if we're looking at this, okay, look at this slow stochastic down here, and you can see that you have this embedded reading. These two lines right here are above this 80 over here, okay? And so this means you really are pretty super bullish in spite of things, okay? And there's some other stuff that's very interesting. This dark dotted line is the 200-day moving average, and you can see you came down all the way to it, and then you got this green candle right off of it that exploded right off of it. Okay, so things are really sort of in a very bullish trend. There are a few other things that we should be aware of. One, this is the 18-day moving average, the light dotted line right here, and the bold, the thick line here is your 100-day moving average. Your 18-day moving average has crossed over the 100-day moving average. Now, what this typically tends to suggest is that you're going to get a move above the previous high when you start to see this happen, okay? And I will draw a line right here. So this over here was your previous high at 429, okay? Right in there. That line right there. So what you typically, when this happens, you will typically see that high get retested, if not make for a newer high. And you can see where this happened before. You can see the 18-day came down, came up through the 100, and this was your previous high back over here, okay? This was your previous high, and you came in and you broke above that, and you made this high right here, right? This same high, right? So you rebroke that. Okay, now, and these are really your major highs. So the idea that this is going to go up and break that isn't, from a technical analysis standpoint, that's not out of the cards. Where it really rattles your cage is that fundamentally this does not make any sense. The Fed is not done raising interest rates. And the CPI numbers have not, the inflation numbers have not come down. Okay, so you're in this really weird spot where it's like this is happening, but it really feels like it shouldn't be happening. So one of the things that you can also notice here is the times that the 18-day did come into the 100-day, usually you found yourself with a rejection. And this is really, if you are thinking about being short, your best possible hope here is to watch this 18-day moving average and see if it rejects right here at the 200. That is really where, if you're wanting to take on a short position that's really going to make you a lot of money, that is probably your best bet. You need, though, to not run in and buy it. You need to wait for this average to move into here and then wait for this thing. And now the cool thing is we can follow our 18-day moving average right up to here. And you can see that tomorrow or the next day, somewhere in the next 2 days, you're going to get this move of the 18 into here. Okay? That's kind of in there somewhere. The other thing that you're also going to be able to notice is that these are moving averages. They move every day. Guess what? Look there. Boom. These two things are going to intersect here 1, 2, 3 days. Somewhere on Wednesday, this is going to come to a head. Okay. This 18-day crosses above that 200, and you should have a real big move happen if that happens, okay? And you're only 3 days away from that being a possibility. Now, these could mangle together and flatten out. They could really tie those averages up. But you do have these really big moves setting up to the upside. Again, the fundamentals do not suggest a higher a higher move up, I would definitely be looking to buy this with 18-day coming over, and there's some stuff you can see here. You can see the 18-day came over, you made the high here, but it wasn't until this point right here that you began crossing back, right, till you became making the move back down. So again, there's a lot to be said as far as like timing this move. That will be very, very hard. Like I said, I would be interested in really looking to a short position somewhere when this is either when the 18 is finally against the 200 or is coming back underneath it. That would definitely be where I would be looking for the short position. Now, as far as the bulls out there, again, and this is my short thesis, but again, going over here, there's a few things that you should be aware of. One, okay, we go over to Dow Jones, and you will see the Dow Jones is leading the market, okay? And there's a lot of stuff. We go to the weekly picture, and you can see here that you have a higher high with a lower low. You are void of trend on a weekly thing, right? This is quite literally considered a corrective wave. If you study Elliott wave theory, this is absolutely a corrective wave. One, there's very little to no pullback in here. That really kind of does count weekly time frame. We go over to the daily, and you can see that the 18 came over the 100, it came over the 200, and you are on a daily time frame, you are looking at the 100 getting ready to come over the 200. So the Dow Jones is looking relatively bullish coming into here. Again, until you get to here, I wouldn't be making any decisions until I saw what these two averages were going to do right here. There might be some other guys who have some better insight into this than I do. But as far as I can tell, I would be kind of, it's so risky, it would seem. Okay. Now, we can go back over to the VIX and see what the VIX is telling us. And if you notice some stuff about the VIX, notice every time we kind of get into these lows, right? You come into these lows, you get a spike up, right? You have that right there, this spike up here. You get this spike up here, come into it, it spikes up. They're really, and then it gets underneath the 100 and underneath the 200, and you get even more spikes up, okay? On a weekly time frame. As it gets into here, they really do send this thing. And there's some other stuff that's also really interesting. One, this dotted line down here is your 200-day. This is your 100-day or 100-week moving average. The 100 is about to cross underneath there, which I think starting tomorrow will be below, the 100 will be below the 200. And that will suggest that you go and make a new low. I don't know if it'll go down to the 14 on that, or it is possible if the bear market really roars on, this average, the 100 week, should bounce off of the 200 and start heading back in the north direction. Okay, that's the weekly. Now again, that's hard to trade on the weekly. That is a very hard thing to look at. The time frame is too far out, and there's a lot of factors that can change it. You can see here that with that weekly average, you can see price did take out this previous low back over here, and you could be setting up to make even fresher. Again, you really got a lot of work. Your 18-day moving average is very negatively sloping. It can turn on a dime. You can see this over here that, but one of the other things too, I want you to see here also is price is all the way down here and your 18 moving average is right up here. This is a very extended, it is very extended. So be ready for the VIX to correct that overextension. And you can see where it did it before, where it got way off of it and then extended, it corrected right back into the 18. So on the daily time frame. Okay. Now, some of the other things we want to look at, if we're looking at the Dow Jones as far as market leading goes, we also want to look at the IWM. And IWM, it's commonly said that the small caps lead the large caps. Okay. So IWM tends to lead. And you can see here, you are getting that 18-day move over the 200. So the idea that this is not going to go on a run is hard pressed. I think you are going to get a bull rally or a Christmas rally. I think that's coming. I don't think that you're going to be able to stop it very easily. It could be, but you've got a positively sloping 100. You've got the golden cross of the 18 of the 100 and the 200. I mean, all signs are definitely a go right here, and it's a lot closer than it was before back over here. So I really think you're looking at a situation where you really are looking at a situation where there's a lot of possibility. Hold on, I want to look at that really quick. There's a lot of possibility here for what can happen going. And again, especially, I think the risk is basically to the downside. And they tell you the trend is your friend until the end, So, trying to find a spot to go short here is really difficult. Again, here too, if we go into TLT, we're going to look at the bonds. And again, they are coming in to buy these bonds up as high as they can. And one of the things I wanted to bring up is the 30-year yield. Now, a lot of guys are looking at the 210, things of that nature. But if you do look at the 30-year yield, you can see it's come from the 44 all the way. I mean, it's a 10-point move on the daily. You're at the 100. Okay. Now, one of the things I would say about this yield, look here. Last time it got to here, you got a big throw up there. Okay. If those bond yields start going back in the upward direction, that could spell doom for the market. And then we going over to the dollar. Looks like you are going to get the death cross, the bearish cross. You got it on the 100. Now you're getting it on the 200. I would say that the dollar is probably headed a lot lower. And I would say if I was looking for a price target, I would put it somewhere. Wow, that's actually a weird contradiction. You got the 100 coming over the 200 on the weekly. That's a bullish crossover that happened. You could see this thing bounce back pretty hard as far as things go. Now, IEF. So this is the one, these smaller indexes are kind of where everybody's really watching, right? Got the death cross 100 over the 200, right? You took out the low. Now you're turning back around on the shorter term time frame for the bonds. And you've got a lot of work to do here. So again, I don't know as far as all of that goes, where that's going to matter. I will know more when I'm going to watch Steve and see what he says about bonds. The guy really does know bonds better than anybody I've ever seen. So as far as all of that stuff is concerned. So again, really, if you are looking to take on the short position, let's go back. So if you are looking to get short this market, again, where you want to be looking is watch those averages. When they come up and over each other, it means something. And when they go back underneath each other, it means something. And I would really, really expect that they are going to try and push SPY back into a bull market this week or next week, or all the way into the beginning of next year. So you really could have a complete reset, and you could honestly have another redo of next year or of last January, where you rally into the middle of it. You get some FOMC minutes that rattle the cage of the market or some other thing. And that's where the crashes happen. The other thing, and this is the one, again, that I think is really funny that nobody talks about, is everybody assumes that the economic picture is so blasted weak that it won't be able to handle a crash, or it won't be able to handle, not a crash, but it can't handle a recession, a small recession. The thing that's funny is everybody who's betting, there's guys who are betting on a Fed pivot. There are guys who are betting on a stock market crash, but nobody's really betting on that soft landing. And so the thing I think is really funny about that is if there is something that if you really are a contrarian, you might actually think more towards a soft landing than towards either of those other two outcomes. So anyway, with that being said, this has kind of been the technical analysis. This is what I'm looking at for this week, how I'm thinking. Again, really looking for those longer term short positions. I think that's going to be better, and the risk reward there, especially if you're following those averages, is pretty high, right? You've the bang for your buck is definitely there, and your risk is pretty easy if you're watching the averages and using those as your risk management as opposed to price levels. If you are day trading, you'll need to probably manage price levels and things of that nature. If you're looking more longer term positions, swing trading, trying to set yourself up in a good position to take advantage of the downtrend into next year, this is definitely going to be this month will be a really good place for you to get a really good short position. Like I said, though, I think I'm watching those averages on the daily as far as where I think it's going to top out. I'm not afraid to hedge long against a short position. So we'll see. Anyway, this is the Russell Journal. I'm Russell. It's written, edited, and hosted by me. We are produced by Social Media Shows. Our executive producer is Maria Pureza. If you are interested in doing a show like this, hit up Maria. She and Social Media Shows. The website or the email is in the description down below. She can help you out. They can help you out. It's a good. I've had nothing but positive experience working with these guys. So until tomorrow, though, pretend I said some sort of catchphrase. You there, princess?